Too earlier into the early afternoon on this Fed day Wednesday, and markets are in full countdown mode to that 2 p.m. decision. I'm Grant Mercer. This is Storm Stock Solutions, and the tone right now is tight and tense, but controlled. Very much a no one wants to stick their neck out. Tape ahead of Powell's last meeting at the helm. What's really anchoring the story, according to MarketWatch, is how stocks have historically behaved on December Fed days. The S&P 500 tends to see modest gains on these days, but this time could be different. You've had Powell's final meeting of 2025, an economy that's already digested a long tightening cycle, and a market that's hypersensitive to any hint on the path for cuts in 2026. Traders aren't just asking, do we get a move today? They're asking, do we get a new script for the next 12 months? Layered on top of that is the succession question. MarketWatch reporting highlights that Kevin Hassett remains the front runner to replace Powell, even as his odds have slipped and former President Trump signals that a decision may not land until next month. That delay injects another dose of uncertainty into rate expectations, until the market has clarity on who's in that chair. Every word in today's statement, every dot in the projections is being read through a political as well as an economic lens. That's an area traders are handling with care. On the strength side, one of the brightest spots on the radar is Broadcom. As Brittany Nguyen reports for MarketWatch, enthusiasm for the company's custom AI chips has made the stock a top pick on Wall Street heading into tomorrow's earnings. The AI infrastructure theme has been a core upside driver all year, and Broadcom sits right in that slipstream. But that also means expectations are sky high. Professionals will be watching not just the headline numbers, but bookings and commentary around AI demand into 2026 to see if the story can support the valuation, or if it becomes a source of disappointment. There's also a quieter sign of resilience in labor and HR trends. Jessica Hall at MarketWatch continues to shine a light on job ads that may be discriminating against workers over 50. Phrases like digital native and energetic that could bring legal and reputational risk. For the market, this is less about one company and more about a theme. Firms that get ahead of these issues can avoid brand damage and regulatory costs, while those that ignore them could see pressure if a controversy erupts. In the background, I'm keeping an eye on a couple of under-the-radar stories that could matter more if conditions line up. One is the bond market mystery. Joseph Edinolfi flags at MarketWatch. Rising long-end treasury yields that don't fit neatly into the usual narratives. Apollo's Torsten Sluck suggests this odd behavior could be a sign of trouble ahead, whether it's deficit worries, term premium, or something else. If long yields pop again after the Fed, that could weigh on high-duration tech and growth names and support a rotation into more cash-generative or defensive sectors. The other is more personal finance-focused but speaks to broader sentiment. Quentin Fottrell's latest MarkWatch column profiles a couple in their 50s with a paid-off $450,000 mortgage, $500,000 in IRAs, and rental income asking, where are we vulnerable? That kind of mindset, cautious, worried about blind spots despite solid footing, matches what we're seeing in the market. People are better positioned than in prior cycles, but still on edge about inflation, rates, and longevity risk. Looking out to the next hour, all eyes go to the Fed statement and Powell's final press conference. We'll be watching whether the S&P 500 follows that historical pattern of modest December gains or breaks it, how Broadcom and other AI leaders trade into the close with earnings looming, and whether that long-end treasury mystery resolves or deepens once we hear from the Fed. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.